Let's dig into a topic that might seem counterintuitive, yet it's a major concept that's helped me survive and even thrive in crypto and NFTs since 2008. Have you ever heard of contrarian investing? If you haven't, buckle up. This concept could be a lifesaver in these volatile markets. In essence, contrarian investing is a style where you go against the prevailing market sentiment and emotions and what the masses are thinking. You buy when everyone's selling in a climate of fear, doubt, pessimism, or FUD. You sell when everyone's buying amidst unwarranted optimism, euphoria, and hype. This sounds insane, right? Why would anyone want to go against the tide? But here's why it works and why it's less risky than you might think. Let's break down why the strategy can be so effective yet so counterintuitive. The market is emotional. Financial markets are not purely rational because there are human beings trading them, or even human beings programming the bots that are trading. They're heavily influenced by emotions like fear and greed, and when people are greedy, they overbuy, inflating prices and creating bubbles. When they're fearful, they can oversell, pushing prices far below their real value. Contrarians aim to take advantage of these emotional extremes. Market has corrections. Markets tend to correct over time. What goes up must come down, and what goes down often rises again, especially if the fundamentals of the project are strong. Contrarian investing is about identifying these cycles and getting in or out before the correction occurs. And then there's a safety margin. When you buy an asset that everyone hates, the chances are that it's undervalued as long as you look at the fundamentals and you're seeing that this is a project that can survive the sentiment that is happening. This provides a margin of a safety, and in worst case scenario, the asset might not go much lower. And if the sentiment changes, you've got more to gain because you're closer to the bottom than you are at the top. Limited competition. Being a contrarian often means you have less competition for assets. When everyone's selling, you have your pick of assets at discounted prices. When everyone's buying, it's easier to sell at a premium because the demand is high. Supporting historical data. Numerous studies, like those from the National Bureau of Economic Research, show that contrarian strategies often outperform the market, especially over longer time horizons. In simpler terms, contrarian investors aim to buy low and sell high, but they do it in a way that challenges our instincts and conventional wisdom. When an asset is hyped, it's likely overpriced. When the world hates it, there's chance that it's a bargain, and who doesn't love a fire sale? What does this mean? You should always go against the grain? Absolutely not. There's still thoughtful thinking that needs to go into this. The key is to carefully evaluate the situation, understand market trends, and be prepared for the risk. Sometimes the crowd is right, and sometimes they're horribly wrong.
Tim,
Wrong.
Your job is to discern which is which. And the caveats, because there are going to be caveats for this strategy. You have to look at the asset strength. Contrarian investing doesn't mean you're buying every microcap altcoin or digital asset. That asset must have strong fundamentals to survive and thrive after market sentiment turns around. This must be an asset that can survive overwhelming positive or negative emotions in the market. And even with strong fundamentals, if the crowd is not behind the asset and they are not at the point where they can be self-sustaining, then that asset still might not survive as well. 2. Timing. Contrarian investing often requires a longer investment horizon as it can take longer for the market to recognize an asset's true value. But if you're making more tactical short term trades, and if you're more familiar with an asset and have a feel for the probabilities, you'll know what the potential market reactions could or could not be. But this takes time to get to know the asset and the market and the different people that are trading within it. 3, your risk tolerance. This strategy is not for everyone. It requires a strong stomach to go against the crowd, and there's always risk that the market won't turn, or at least turn within the time frame that you're thinking. Remember, an asset must be strong enough to survive over the long term. An example is buying during the bear market. Yes, it might be at 50 or plus more discounts, but if it never makes it out of the bear market, then it won't matter that you got it at a steal because it'll be worth nothing. How do you recognize a good contrarian opportunity? So, if you're intrigued by contrarian investing, you want to know how to spot an opportunity. Let's keep it simple but detailed. First is gauging the sentiment of an asset, which is just a fancy way to say, what does the market feel about it? What is the market's emotions and feelings towards that asset? Are they positive or negative? Next, you need to evaluate the quality of the buzz around a certain asset. How saturated is the market currently? Are we talking mainstream media here, like CNBC, or even non financial magazine like People declaring that Bitcoin is the future? If yes, then caution should be your safe word. If no, then you can evaluate and see how saturated everything is at this point. Contrast that with info coming from specialized sources like a dedicated crypto research firm, dedicated crypto institution, crypto forums, Discord channels, Telegram groups. If a friend who spends all day, every day giving and diving into these niche communities tells you something is hot, then it could be more credible than mainstream hype, especially if they're successful in this niche. Let's look at some very specific examples inside the crypto world. Remember the Dogecoin and Elon Musk Saturday Night Live appearance.
Now, what is Dogecoin?
Well, it actually started as a joke based on an internet meme.
This was a big event where everyone was talking about Elon Musk going to talk about Dogecoin on Saturday Night Live. And because that is a mainstream channel with mass appeal, that this was going to push Dogecoin's numbers to over $1. If you did the fundamental research, you could tell that this was a very highly unlikely scenario, but this is what people were believing because of the exposure that it got. For the weeks leading up to Musk's appearance on Saturday Night Live, the price of Dogecoin was skyrocketing. It went from 5 cents in early April 2021 to an all-time high of about 73 cents on May 8th, the day that Musk went on Saturday Night Live. You might think, wow, what a great time to get in. But if you bought at that peak, you would have been in for a rough ride. Within a week, right after that, Dogecoin plummeted to around 50 cents, wiping out a significant chunk of its gains. So now, why did this happen? One reason is that everyone was talking about it, from crypto enthusiasts to your next door neighbor who had never heard about blockchain. Because of the hype surrounding Elon Musk talking about Doge on SNL, everybody was already talking about it, and this was a catalyst for people to get into Dogecoin before this. You can see that the event was already priced into the asset. There's the old adage and quote that people say, buy the rumor, sell the news. This is one way to simplify contrarian trading. So you're going to buy the rumor that Elon Musk is going to get on SNL, and then you're going to sell the news once he actually gets on SNL. And that is a simplified way to think of this strategy or to implement it into your toolbox of trading and investing. So here's a rule of thumb. The more mainstream the buzz, the more cautious that you should be, because that means you're closer to the market being oversaturated. When your grandma starts asking about Dogecoin because she saw it on the front page of People magazine or her favorite tabloid, that's usually not the best sign for a longer term hold. This applies to other cryptocurrencies and assets as well. For example, at the end of 2017, saw Bitcoin reach an all-time high of nearly 20,000, only for it to crash down to around 6,000 in the first couple months of 2018. For the people who got caught up in the euphoria, they ignored the signs of a bubble and paid a steep price. And one of the things that we saw at that time were people taking out massive loans to get into Bitcoin because of the euphoria. When you start seeing these types of news stories on mainstream media, this can be a sign of an overhyped market. These are cautionary tales, but they demonstrate an essential principle. Be wary when everyone else is greedy, and consider being greedy when everyone else is fearful. These are cautionary tales, but demonstrate an essential principle and a famous Warren Buffett quote. He once said to be fearful when others are greedy and to be greedy when others are fearful. This is the essence of contrarian trading. You want to not be caught up in the market hype. And if you're trading over a very long time frame, let's talk 5 years, a decade, then you're going to have to think about how the news affects the different cycle that you're in. Now let's talk about practice. Contrarian trading isn't something that you'll master overnight, and trust me, we've all been there, selling too early or buying too late. It's a part of the process. You'll get better the longer that you're in the game. Contrarian trading is as much about skill and strategy as it's about intuition, and your intuition gets sharper the more that you practice. Things you can use are Google Trends, which is nice because you get to see how many people are actually searching this topic or trend. You can see technical indicators like the RSI, which is relative strength indicator, or Bollinger Bands, which this measures volatility and shows you the different highs and the lows and where the price of the asset is in comparison to those. And even advanced sentiment tools like Sentiment. This is an advanced crypto tool where it uses AI, which scrapes a lot of different online resources from Twitter to Discord groups to Reddit, and also places a weighting on them, and then gives you a better idea of what the general market is feeling based on actual data. So subscribe to the channel because I will cover those strategies in detail and walk you step by step, and keep learning. And remember that contrarian trading is a calculated risk, not a gamble. Always do your due diligence and only invest what you can afford to lose. It's not for the faint-hearted, but the rewards can be worth it.